Let's take a look at some charts on Dogecoin from this week's article on Brave New Coin. So Dogecoin is a proof-of-work coin that has inflation currently lower or equal to ETH, which is a bit interesting when you think about it. Dogecoin started in, 2014 or earlier. It is a bit of a meme coin, a joke coin. The world has become aware of the coin. It has a very penny stock mentality in that it has a classic pump and dump range historically. A lot of people have been talking about Dogecoin. A lot of celebrities, a lot of younger Instagram, TikTok personalities have been talking about Dogecoin, and all of that has heavily influenced the price. Something I didn't mention in the article was Robinhood, and being able to trade Dogecoin on Robinhood has allowed the GME, AMC, legacy stock trading spill over into other stuff like Doge. It just happens to be a cryptocurrency that we are all aware of, but without Robinhood, I don't think we'd be where we are today with the Doge price or the Doge chart. I'll get to all of that at the end. This is the hash rate and difficulty of Doge, so it is a proof-of-work coin. It is merge mined with Litecoin. They are both script coins. Now, if merge mining wasn't a thing, Dogecoin wouldn't exist. Basically, it means you can mine Litecoin and Dogecoin at the same time as a miner, and there's no reason not to, because it's just added profit at the end of the day. So that has allowed Dogecoin to survive along with Litecoin. Dogecoin won't disappear so long as Litecoin is still around. The issue with these proof-of-work networks, if they are unpopular or have an algorithm that is unique, is that they often don't last very long because the security just isn't there if the hash rate isn't there. So allowing the merge mining means that so long as Litecoin remains secured, Dogecoin will remain secured. Hash rate's been violent over the past really year, since April. Some of this, ironically enough, is based on botnets turning things on and off. Botnets love two things. They love Monero and they love Dogecoin. Not sure why, but I mentioned it in the article. And seeing this hash rate go up and down like this, you don't see that on Litecoin, which is interesting. I can't really explain it. I don't know enough about it, but something to look into if that interests you. These are the current ASICs available, and the first thing I always notice on these lists is when has the latest ASIC been released. So these are specific miners to this specific algorithm. And because there aren't a lot of things to mine with script algorithm ASICs, other than Litecoin and Doge, you don't really see many new ASICs get released. So we're a few years out, really, at this point, since the latest ASIC got released. Most of these, or all of these, are probably expired, dead by now. ASICs do have a life. They don't last forever. So at this point, most of the network is probably mined via GPUs or CPUs and not ASICs. That'd be my guess, just because there haven't been any new ASICs released since March 2019. Probably the newer ones are still up and running, but these 2017 ones, probably not, if I had to guess. Profitability is extremely high right now. This probably is a Litecoin calculation and doesn't include Doge, or doesn't include Doge and Litecoin. That'd be my guess. So profitability is probably slightly better if you include Doge in this calculation. Looking at the transaction counts and transaction sizes, very interesting looking graph that I tried to fix the scales on a couple times because it's a bit difficult to see, but historically since 2018, Doge has had this range of transactions counts. It increased during that TikTok pump in 2020, dropped back into the range late last year, and then exploded again in December, January, and February. Transaction sizes have increased by, 100-fold, whatever this is. It's increased by a lot. And my guess is a lot of that is the Robinhood stuff, a lot of that is the Elon Musk effect, a lot of that is just random people, celebrities buying, all sorts of stuff going on in the Doge ecosystem as far as new money, just an onslaught of new money. And I'll show the Google Trends in a second, but that really tells the whole story, the Google Trends graph. We can look at on-chain stuff till we're blue in the face, but to really get a sense of new money, I like to look at the Google Trends because that just shows who's looking into the coin specifically. It's a bunch of new people getting in. So that's incredibly bullish to see transactions the way they are. Fees are now 22 cents, which is insane for Doge, considering most of the fees in Doge's lifetime have been a penny or less, really like half a penny historically. So tons of activity here. Obviously, transaction counts go up, block sizes go up. The real estate, the expense at which it costs to send the transaction is limited, so fees go up. That's just how blockchains work. Here's NVT and active addresses. Active addresses are extremely high historically. They're at a multi-year high. They haven't been this high since 2014. This is a 30-day moving average. I believe Robinhood announced yesterday that they are going to allow withdrawals, crypto withdrawals from Robinhood. So if that actually happens, I expect active addresses on Doge to just skyrocket if people are transferring off Robinhood for whatever reason, or transferring to Robinhood. Generally how that works is the Doge is kind of transferred to a Robinhood address and then it's on the Robinhood ledger, but if it's taken off of Robinhood, it's on an individual's address, and that will likely change active address counts pretty significantly, I think, to the upside. So again, another reason to be incredibly bullish on the fundamentals as far as transaction counts and active addresses. NVT declined significantly mid last year, late last year, and then is increasing again. So this is really, again, in the upper historic range, somewhere around 90 essentially. And it's not too bullish. It says that the market cap has gotten ahead of itself based on on-chain activity, especially relative to where NVT has been in the past for Doge. And I think the most concerning on-chain metric is MVRV, market cap over realized cap. So right now, the market cap is 3 times the realized market cap, which is how much coin is moved on-chain. So things like Robinhood and the involvement there is going to artificially inflate this if all the coins are on Robinhood and they're not being moved on-chain. There's a lot of caveats here, but historically, anything at this level has been the danger zone as far as the retracement, and we're seeing that in price already. But it's probably unfair to compare this to 2017 and 2018 with Robinhood in the picture, Yahoo in the picture, stuff like that, where it's sort of off-chain. It's in a ledger, it's in Robinhood's ledger, it's in Yahoo's ledger, it's in whoever's ledger. But if I'm just looking at this in a vacuum, this to me is the most determining factor. The biggest determining factor for bullishness or bearishness. I can look at transaction counts and active addresses, but if it's a proof of work coin with an MVRV that I can look at and point to, this does not look like it has much left as far as room to the upside. This just looks like it's peaked, it's topped, it might double top like it has historically a couple times, but if I'm actually trading this, I'm out completely. I'm just waiting. The buy zone is down here, sell zone is up here. You just have to be realistic with it in that sense. If we look at Google Trends, I did a quadruple take yesterday when I looked this up because this is the most blown out Google Trends I've ever seen in my life. If you look at any other crypto that's been around since 2017, typically you see a strong peak in 2017. Google Trends, by the way, just searches for the specific word. So if you type in Dogecoin, or there's Dogecoin articles or anything Dogecoin related, specifically that word, this will show up on Google Trends. So we saw a spike in 2017, which was the all-time high. We saw a spike during the TikTok pump to 40 sats. But this is truly a magnitude, a 4x magnitude greater than the previous all-time high, basically. So a ton of volume interest here. Really no words for the amount of interest. This is global, by the way. So this is... Yeah, you're not going to see this on anything else probably ever again. And you're never going to see a peak like this on Doge ever again, most likely, because once people know about something, they don't necessarily re-Google it or whatever. This was just an insane amount of new interest getting in at one specific time point. Google Trends is predicting a down week pretty heavily over the next week. And this, more than anything, will mirror price. It's hard to look at this intra-week and think it's bullish or bearish. You can look for divergences in this. You can look for leading momentum indicators like this. In this week it was projecting a massive up move. This week it's predicting a massive down move. And this to me is really just an embodiment of new money interest or lack thereof So I expect price to continue to fall based on that. You know, the interest just isn't there anymore. If we look at technicals, VPVR, yearly pivots, RSI, volume. This is Poloniex, so a few caveats there. This is the weekly chart. Historically, the time that Poloniex has been around, the rise and fall of Poloniex, you know, is basically 2017, 2018, 2019. So this volume profile is going to look different than any other exchange because they're just not as popular anymore. So the volume looks pathetic for this specific exchange on this specific chart relative to where it was in 2017, 2018. You can't really look at any other exchange that has Doge data, trading data, back this far. So you'd have to make an index and sort of aggregate everything and blah, blah, blah. For me, it's just easier to look at Poloniex. So when I'm looking at these volume profiles and I make this big assumption that we're going back to 40 sats because that's where all the volume is historically, 40 should be support because that's where all the volume is historically. This is going to change depending on what you're looking at, which exchange, if it even has data going back this far. But this is pre-2015 as far as trading history. So to me, this is the best we have to use. Like I mentioned, 40, big level, giant level. Historically, this doesn't hold 100 sats. It's never been really historically above 200 sats. Multi-year high there. As far as price is concerned, I don't expect this to reconsolidate in a bullish fashion. I don't expect this to experience bullish consolidation. I expect this to continue to sell off as it has every single time on every peak in the history of Doge. You know, unfortunately, these highs just don't hold. It's just got too many coins in circulation. It's got an inflation that's quite high relative to its total market cap, and there's no cap on total coins. You know, this was never meant to be a store value coin. It was just meant to be a sort of starter entry for the crypto curious to play around with. Historically, though, it's had incredible speculative value. You buy below 40, you buy even more below 20, and then you just hold it until it makes some peak that you're satisfied with. That's how you trade this. If you're trading this, you don't FOMO in at 200 plus sats and expect a 2x from there. RSI hit an all-time high on the weekly, somewhere around 96. So stuff like that just isn't sustainable over multiple weeks, especially when you're looking at a Doge chart like this. So unfortunately, I'm very bearish on the prospect of Doge making higher highs anytime soon. It'll go up and down with an Elon tweet because there are a lot of bots looking at Elon tweets now. A lot of Elon followers looking at Elon tweets. So all that stuff's going to affect the price, but ultimately this is just going to go back to sub 40, most likely. There's cloud support on the weekly at 60 sats as far as where it might try to support, but I don't expect any long-term supports to even hold here. I just included the cloud because I always look at the cloud on the weekly for Doge. If we look at the Doge USD chart, though, on the weekly, which is probably more important considering there's more trading volume now on USD for altcoins than BTC because there are more tradable pairs in USD now than there were historically back in pre-2019. Pre-2019, 2018, everything was priced in BTC as far as alts are concerned. Nowadays, most things, I'd say most trading pairs with volume for retail are in USD. So last month I said this was incredibly bullish because we were above the cloud for the first time since 2018 on the weekly chart, right? We vacillated, perambulated, oscillated below the cloud, tried to print some sort of ugly inverted head and shoulders over and over again, and we broke up. Now, this is a great example of why you always treat every single bullish entry on the cloud. If you believe in the system, it's a buy and hold every single time because you never know when you're going to get the 10,000% or whatever percentage this is, right? Like this doesn't happen in normal markets, obviously. This is a very specific situation. But if you're on a high time frame with the cloud, with doubled settings, and you see a signal that hasn't happened since pre-2019, that is an incredibly strong signal. So even I traded some of this, but I didn't hold it to 7. But I did trade some of this personally from like a penny to 5 cents or whatever it was. So you can't ignore stuff like this when it happens on high time frames. I also looked at the 4-hour Doge because it's got a lot of volume right now. historically Doge has had no volume, right? If we just look at this on the weekly, there's, you don't get a lot of movement intra-week, even intra-month for Doge historically. But when it does move, that's when you have to bump down the time frames and start paying attention if you're actually trading this, right? If you're not trading this, who cares? It's going back to 40 sats or less, you buy below 40 sats or less, you leave it alone. But if you're actually still in the trade or looking for shorts, looking for longs, looking for leverage, blah, 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 you're looking at stuff like the 4-hour because that's going to give you those intraday signals that you need. So if you were looking at the 4-hour in late January, here's another long entry signal for the cloud, and then it gets super messy. After that, and it's up to you, what your stop loss is, what your targets are, whatever. But right now, it's in between the yearly pivots, essentially, 9 cents and 5 cents. 5 cents is a big psychological support. 10 cents is a big psychological resistance. 15 cents all the way up. Every 5 cent increment at this point, I would say is a significant psychological support resistance level, because collectively on the USD pair, retail traders are going to look to that and want to buy or sell, is my guess, based on those levels. So 5 cents is also the yearly pivot support. It's also the bottom of the cloud. So what I said in the article is if this gets a bullish TK recross with a Kumo breakout on the 4-hour above the cloud, then for me that would be a decent enough long entry signal. So this may even turn out to be an ascending triangle over multiple days leading into March. So it's very possible this could get another run on the 4-hour. But I think an expectation of a move to 200 sats is bleak based on historic price action. And, just look at the fundamentals. Are corporations buying Doge in droves? No. Are pensions buying Doge? No. Are endowments buying Doge? No. Are they looking to get into things like BTC? Yes. So, I wouldn't expect just the massive moves out of this anytime soon on the BTC pair, although the USD pair does look like it has a decent possibility for another move to maybe 10 or 15 cents. But I would definitely keep a keen eye on the 4-hour. If the 5 cent area doesn't hold, it's going back to a penny. That's where the volume is. That's where the VPVR level is. So overall, it's been an exciting time for Doge, and it was due price-wise. The price move on the BTC pair was rather unexpected. The price move on the USD pair was in the cards, as it were, based on trend. And if you are trading this, if I was trading this, I'd be looking to lower time frames for any potential signals in the near term.